Hello and welcome to the third episode of the Taulia Spotlight series. My name is Shannon Manders and I'm the editorial director of GTR. In this episode, we are going to be taking a look at the power of data in the context of financial services, trade, and ESG. We'll explore current data usage as well as some of the goals for future data utilization in areas such as financial inclusion, credit analysis, and ESG strategies. We're going to examine the role of banks and fintechs. We're going to look at the impact of digitization, and we're going to look at some of the obstacles that are hindering progress in this space. So here to discuss this with me, we have three fantastic guests. And I'll do a very quick introduction of each of them. Starting with Michael. Michael Franzmitis is a recognized leader and former banker in the trade finance industry, and he's currently an advisor at several fintech companies. He's also the deputy chair of the World Trade Board. Welcome, Michael.
Thanks, Shannon. Alongside
Michael is Rebecca Harding. Rebecca is a highly respected economist and independent trade expert. And she's also the founder of consulting firm Rebeccanomics. Welcome, Rebecca.
Thank you.
And alongside me, Ali Ansari. Ali is an innovator in the financial technology solution space. He's also the managing director of product management at Taulia, our host. Welcome, Ali.
Thank you.
Thank you all for being here with me. Let's set the scene. Why are we talking about data today? Could you each very briefly outline your own experience in terms of dealing with data flows, and data usage in the context of trade / financial services / ESG. I'll come to each of you on this one. I'll start with you, Ali, and we'll move down the line.
Sure. So, as you know, I'm a chartered accountant. My interaction with data started when we were auditing financial statements. Mm-hmm. It was a time when we had to look at actual financials back to end, cross-refer things, do substantive testing, make sure data was valid. And then we had to form our conclusion on whether the accounts were representative of the business or not based on a lot of analysis. In those days, analysis was all manual. We had calculators. Then we moved to banking. Banking, the use of data was very different. It was about risk management. It's about product profitability, performance. And then with Taulia, now we look at data in a completely different way. We look at how it can be used to help companies develop their strategies and how we can use the power of machine learning to drive guidance and advice for our customers. It's been amazing, 3 decades of looking at data in a very different way. And I'm excited about what's coming our way, what's generative AI and machine learning got in their toolkit.
Excellent. Rebecca, how are you using data?
One of the first things was don't ever let data mess up a good theory, right? So, data and economics are meant to be bedfellows with each other, but if you are going to model, you have to make assumptions, and so the whole of the history of economics has been of making assumptions and leaving data out. What's happened particularly over the last 10 to 15 years is not having any data, but actually having almost too much data, and we need more intelligence. And so economics has kind of morphed into this really exciting discipline with data science to turn into something where we can actually start to make interesting, relevant, useful insights into the real world. And in trade, that becomes incredibly important because it is so rich with data. And the issue then becomes, how do we find out the right data and turn that into intelligence that people can actually use as actionable information?
Mm-hmm. Michael.
Great, thanks, Shannon. And I was an economist. At least I did economics at school and econometrics. But I think my first real application of data came when I was working in retail banking. And in retail banking, data analytics has been like a core to success of credit cards and personal loans and other types of products for a long, long time. The word data science was used in retail banking way before it's been used in the wholesale banking context and corporate banking context. That was my initial experience around it, and I think when I was running trade for a large international bank, we looked at how we apply a lot of these techniques into the commercial space, really around looking at predictive analytics, as well as data matching and accelerating and reducing the manual work involved in the trade process, for example.
So lots of experience in the space.
Excellent. Great. Now, Rebecca, you talked about data in the context of economics, but within the world of trade and trade finance and ESG, which I know you work really closely in that space, tell us about the kind of data that's available in this context. Do we have enough of it? I mean, we hear about it all the time. Is there enough data? And how has this changed over the last few years?
So the top line answer to that is there is enough data out there. There's also the technology to process that data, and we're becoming smarter at the process of hooking and harnessing the technology to the data so that we can come out with the right insights. As Michael says, we've been using data for a very long time to inform decisions, and ultimately data is only useful if it's being used in an intelligent way to inform those decisions. So I remember once having a conversation with someone and they said, oh yes, but I want the right data. And I said, there's no such thing as right data. But where we're beginning to get to with AI, where we're beginning to get to with the whole machine learning and predictive analytics is actually to the point where we can start getting the right intelligence, if not the perfect answer. So is there enough data in that space? Absolutely. I think one of the problems is bringing that data, aggregating that data into one place so that we can all use it. And you know, there's a pre-competitive element to that. There's a competitive element to that, obviously. But then there's also an investable element to that, which is using data in order to make the investment decisions to turn trade and trade finance into an investable asset class, for example. And I think that's where the gaps are, because we know there's tons of data out there. Aggregating everything all into one place is a mammoth task. And if you look at the ESG space, we are literally talking about another way of measuring the world. It's a complete, we've based our whole economy on economic growth. We now need to base our whole economy on not necessarily economic growth or maintaining economic growth, but making that growth sustainable. So in fact, we're talking about development rather than growth, and that's a very different proposition. A lot of complicated ideas there, but I think the most important thing is we have the data, we have the technology, we need to bring the two together to work effectively, and then we will find that we can actually move mountains in terms of making data actionable.
Yeah. Michael, do you think that in the world of trade, we're yet using data in an intelligent way when it comes to things like credit analysis and financial inclusion and ESG? What have you seen in your experience?
Well, I think it's kind of mixed at the moment. I think if you look at traditional financiers in the space, they're still very backward looking in their analytics. So, you know, analyzing a balance sheet and P&L of something that's happened in the past versus something that's happening right now or in the future. So I think that's really the way in which traditional finance has been happening and continues to happen, I think a large proportion of it. But what we've seen is a lot of new players come into this space, particularly alternative lenders, that have built, you know, machine-based models to analyze data. And, you know, China is a great example where there's a lot of data available, a lot of government data available that's that's certified, so you can actually use that data to actually make credit decisions. There's a number of alternative lenders using 10,000 data points to make a credit decision, and that was happening 7-8 years ago. So, you know, this is not a new concept. And in the West, we've seen an increase in these players, particularly in the SME lending space. And by having availability of data, so for example, electronic invoice information, credit bureau information, access to to accounting platforms or data feeds, you know, permission data feeds from the accounting platform of the corporate, you're seeing the ability to make different ways of making decisions that have come about. So I think it's really, really positive. And some of the traditional lenders are beginning to catch up. They're beginning to pilot this, beginning to use it from a monitoring point of view, but yet to see that real transformation of the credit process, which is still pretty archaic in the world.
Yeah. We're going to come on to the obstacles in a second. But before we do, Ali, in your mind, like, where do we want to get to? Like, what are we working towards in terms of data, the use of data in the context of financing?
So before I talk about where we want to go, the question I'd like to answer is why we want to go anywhere.
Yeah.
You know, what's really wrong with the system or where it lacks? And I think there are 3 areas that I can look at where the financial industry has evolved. One is customer access to financing. So the inclusion part of it, especially with the SMEs, there is still gaps of financing. Second, the cost itself of financing still is quite high, and it's high because the capital for risk and the operating costs remain substantially higher than other industries that have moved on in the last 10-15 years since the technology took charge. And lastly is the customer experience. The customer experience that we see today, or what the banks are aiming towards, is digitizing the 90s journey. I still don't see banks or other financial finance providers moving towards new solutions. They're trying to automate, they're trying to digitize, they're trying to bring things online, but there's still the same journey that you and I can imagine when we were children and opened up our first account or went for our first credit card. The same journey is just digital. And I think that is the problem. And data brings a lot of promise to changing all these issues. For example, when you talk about inclusion or access to finance, the key challenge is onboarding and management of customers. The cost of onboarding, the cost of managing a customer is huge. And it's there because they're still relying on processes and documents rather than looking at data and digitally validating stuff. I think Michael mentioned registries. We have corporate registries, we have desk registries. There are ways to validate a customer using data points that is now available. And unless these banks start onboarding customers in a different manner, we will continue to have that access challenge. That access challenge primarily is because of onboarding. The second challenge, which is the cost, is primarily because of the way we underwrite risk, whether it's fraud or it's pure credit. And again, Michael mentioned there are today the models the bank follow is very legacy balance sheet assessment. Even though you're talking about all sorts of new solutions, and the magazines are full of innovative solutions, they all go back to the same way of underwriting risk. That way of underwriting risk is holding the industry back from evolving into new solutions. We haven't used data to move from balance sheet lending to transactional lending. Now, that is something that everybody wants to do, but it hasn't happened because the data that is to be used is not agreed upon between different partners. The models don't exist, and there's little will to drive the change on a standalone basis. I think we will need the new banks or the new providers of finance to fix that. And last thing, which is the customer experience, it's talked about. The banking industry wants to stick to the old journey. And unless they start reimagining customer journeys using data points, it's going to be very difficult for us to achieve the goals that we want to achieve.
Mm-hmm. I just want to add to Ali's points. Sorry, Rebecca, but I want to add to Ali's point. I mean, we launched at the World Trade Board, and both Rebecca and I on the World Trade Board, and we launched a financial inclusion in trade roadmap, and I think we cover pretty much a lot of the points that Ali raised, really around the requirement for a digital infrastructure, whether that's legal entity identifiers and digital legal entity identifiers, to an e-invoicing platforms and allowing for data to be there, and e-invoicing registries, to ensuring that the laws in countries allow for those changes, and for example, the model law in factoring, which covers a lot of these issues, isn't really, a lot of the terms are not really covered in many countries. So there's a real opportunity there. So I think a lot of these points are covered in that roadmap, but it's a critical part to enabling the future. Mm-hmm. And digitalization is critical to it.
Yeah.
I think I would add to that. There have been several things that have been said that really tell me that we need to focus our attention on transition right now. So this issue around being backward looking and replicating the models of the 90s on using risk models that are based on past performance. If we are going to start looking at ESG in the future, and if we are starting to use the financial and the trade finance system for transitioning to better business models, then we have to be able to model the future. We have to be able to bring the relevant data to pass into those models to be able to use predictive analytics, not just for 1 to 5 years, but actually accurately for 30 or 40 years, because that's the only way of making sure that we transition to these new business models and new economic ways of doing things. And I think unless we get that right nailed into the regulators' heads right now, it's going to be very difficult to do anything other than actually just not greenwash, but green hush, meet minimum standards in the future. So we have to make sure that we're using data and harnessing data along that journey.
Yeah. So coming back to you, Ali, in terms of the question I asked, where do we want to get to? Are we essentially saying a complete overhaul of the system as we know it?
Complete overhaul, maybe not.
Yeah.
I think we need to start using data.
Yeah.
And I'm a big fan of individual initiatives. I know collectively we need to change the industry, but it takes forever. And I don't think we have the luxury of waiting another 5-10 years to get standards in. I think financial industry has suffered from short-termism, if that's a word, since 2009. This is the only industry that since 2009 got into managing returns and stakeholders and never got out of it. And they were into perpetual cycles of let's try and improve that a little bit, 2 bips, 10 bips, 20 bips of returns rather than investing for the long term. And now we are in a place where we have very little expertise in the industry. When I say industry, I'm talking about the financial industry. I struggle to find people who have expertise in data and finance. Right? There is that, those silos. The people who are in finance and there are people who are in data, and they don't talk the same language. And it's going to take us some time before we get those people back into the industry. Second challenge is we don't have, because of the lack of investment, the infrastructure is quite archaic. I know banks that still operate the operating systems that were there in 90s. 2-3 decades old technology still, sits at the foundation of most banks. And it's going to need a lot of change. The question is, can they really change? They are handicapped by their policies. They're handicapped by the models, the regulations. So there is that problem.
Yeah.
And again, the customer experience, you need to really rethink the customer experience before you can bring new solutions. You bring new solutions, then you find the data, then you fix the systems. If you try and do the other way around, it never gets done. And if you try and bring consensus, it will take another 10 years. And I think the financial industry has already missed 15 years of innovation. Everybody else, every other industry moved forward. And financial industry has a unique challenge. One of the few industries where you sell a product with a view of taking it back. It's no longer about how can I just give it away. It's about I'm going to give the product and how do I get it back? And what will happen if I don't get it back? How do I then get it back? It's a very different way of thinking that the data scientists, the people who have experience in the consumer industry or in the other industries, they will struggle to come in. So we need to really drive change from the sides.
Michael, let me come to you. You talked about the role of digitization and Ali's been talking about the role of banks and fintechs. In your mind, what's holding these players back from being able to leverage all of this data that is out there at the moment?
Well, I think it's a point that was made by Rebecca, which is that the data sits in lots of different systems, and there's no single source of data on anything, right? So in order to make a decision, you need to orchestrate data from multiple sources. You probably need to clean it. There's a lot of work involved in actually getting the data in a right state in order to be able to leverage it and use it appropriately. The garbage in, garbage out, right? So if you put quality data in, you can get quality out. So a lot of it is about ensuring that you've got the right data to be able to run your models and run your predictive models. I mean, we ran a number of models on default rates, and we're able to identify key factors that led to a default happening within a 6-month period and got to sort of a 90+% confidence level around that. So that actually increased the ability to extend credit to those types of names because we understood the factors that were impacting the potential default, and we can monitor against that. Once you can monitor against that, you can then extend it. But a lot of that it required a lot of work to get the data into a state that we could run those predictive models and then also monitor those on an ongoing basis. So I think a lot of it's about how you pull data from multiple sources. And for me, generative AI is going to be the key to this. The ability to connect and to use generative AI is going to be the key to be able to start to run some of these models in the future. But today we're just seeing the start of that journey.
Yeah. Same question to you, Rebecca. What's holding back the players in the industry from being able to leverage this data?
I would stand by what I said and what Michael has kindly reiterated, which is the need to bring all this data into one place to create, if you like, a standardised source of truth. Data, numbers in themselves are things. They aren't right or wrong. A number is not a right or wrong thing. It is a piece of information, if you like. What we need to be doing is bringing all of that information together in a way that people can then use it and play with it in a consistent way. So if we look at ESG as a problem, for example, and this is where I think there are some real challenges with data. What we're beginning to see is because the regulatory framework is such that there are short-term benefits for staying with the status quo rather than managing to a new transitioning to a new model. And that actually rests in liquidity ratios. Because all of that is actually happening within this framework, what's beginning to happen is each of the individual financial institutions is going their own way. And as soon as we go our own way in terms of the way we measure these things, we just say, oh, well, this regulation says we need to do that, so we'll do this in our way, and somebody else will do it in a different way. You've actually worsened and multiplied that problem, but exponentially. It becomes impossible. So what we need to do is actually go, well, we need to start those conversations with the regulators where we are beginning to say, we're not necessarily going to create a single source of truth here because that's impossible, but we are creating a single verified source of data upon which we can then start doing the credit modelling that is necessary for climate-related financial exposures, financial risk. That at the moment is embryonic. We have all of these regulations, but we don't know how to model climate-related financial risk unless we look back at it historically. But the financial risk of climate change is in the future. So actually we need to be running those climate models and then looking at prospective financial risk models. We ought to be stress testing 2030. We shouldn't be stress testing 1990. It doesn't work in climate terms. So there's a massive conversation to be had with the regulators. There's a massive task to do for technology businesses to work together to create that process of bringing together the data. And then I think there's an education piece as well with the banks, which is this data is your data. But if you pool it anonymously into a central source, pre-competitively, we can all benefit. That is ultimately going to be the major challenge because sharing data is very, very, very difficult conceptually and in regulatory terms as well.
Yeah.
If I can just add to that, I have a slightly different view on this. And I agree with you that we need to change regulation at some point in time. But if we were to start with changing the regulation, the motivation for the regulators is quite dull. I think what we need is the Uber movement. We need the ChatGPT moment in the financial industry where there's a successful model and then it drives the regulators to come and say, oh, there's a change happening. We need to regulate it. We need to up our game. At least in my humble view, we need to start with the consumer journey, look at the new solutions, test those new solutions, not collectively. As innovative companies, we need to drive these things. There will be a successful model if enough people put their heads together. There's a lot of talent in the industry. Once you have a few of these products running, like this buy now, pay later in the consumer world. We are talking about buy now, pay later in the world of B2B transactions, but it's still hinged on legacy credit assessment processes. It's not going to scale the way it needs to scale. So we need to rethink the journey. We need to find the right products based on data. Data is available, in my opinion. It is not the best quality, but it is reasonably reliable, and somebody's got to start. And then once you get to a certain momentum, people will rally towards it. Once enough rallying is happening, you will see regulators come into play. They will be interested, and dialogue will move faster than if we try and do the other way around.
I hope you're right.
No, but this is the whole concept of embedded finance, right? And we see a huge focus on embedded finance, and embedded finance is about going to the source of the transaction, where it's happening, where the information is, and embedding the financing, leveraging the data that's there. So I think that we've seen that as a massive trend over the last 2 to 3 years, and I think that's just going to continue. And I think, to your point, that's here to stay, right? And will continue. So data is going to be is critical to making decisions in the future. And the more data you have, the better decision you can make. The more likely you are to be able to raise funding against it or investors against it, whether you're in the financial institution side or whether you're in the alternative investor side.
Yeah. I think that brings us to the end of the discussion. We've scratched, I think, just the surface of the conversation in terms of data with regards to financial services, ESG, trade. But I think this is going to give people a good amount to think about. So thank you very much, Ali, Rebecca, Michael. Thank you very much.
Thank you.